Okay, this is going to be a weekly recap from the 31st of May to the 3rd of June. So only 4 trading days. It was a holiday, Memorial Day, on the 30th. And I had a total of 7 trades. I did a lot better than the previous week, which was pretty frustrating. And looking at the stats, I did have 7 trades, 6 green trades. That was an 85% winning percentage rate. I ended up doing a lot better than I thought, but I still feel not so good because there were a few times where I should have been able to have profited much more and that I missed out on some setups, or on some setups like this one with SYXX. I didn't trade the right amount of shares to make it a proper $20 risk level, but overall I am doing better and I am trying to do a lot better trading a $20 risk level, and I think I'm going to be doing a $25 risk level. My average dollar gain was a lot less than my average dollar loss, but I only had one red trade, so that kind of made it up. My average percent gain and loss were about the same. I really want to be able to see myself doing more setups where I'm getting a nice 3, 4, 5% winning, amount on a trade, or even something above 10. I don't want to see these little baby ones, but I did have a bunch of scratches. My average position size was $100, which was less than the one that didn't work out right here. And I had one trade where I was in it for 45 minutes, only $7 of profit, trading $700 of dollar volume. Let's go ahead and look at the setups and the trades one by one, starting with GESI, which is a morning high day breakout. Let's look at GESI for the 31st. I actually already have GESI, but the 31st is back here. One more day. Here we go. This one was interesting because it had this run up, it sold off, and then it had a run up, and then it had a red day, but it actually caught itself. And then in the next few days, it did try to break this range high, and it didn't really do it that nicely, but that was still something pretty interesting to look at. Let's look at the 31st right here. I was in at 936 at 428, so that was pretty close to the market open. Right here at 936, I was in at 428, so 428. Why was I in it right here? As you can see, the top was 425, just in this range right here. And then when it was breaking out of it at 936, I got in the setup at 428. It did get higher. It did get as high as the 450s, and I did sell 2 minutes later at 431. So right here, 431 is when I got out. So right here. Why did I get out? Well, I probably felt uneasy with the price action, but what I should have done here is that I should have sold in 2 pieces. I could have maybe have sold half of my position here at this 431 level, and then maybe the other half if it were to have broken a trend line, which it seems like it might have done right here. Or I could have even have tried to wait for a higher low. As you can see, it had a dip and it held VWAP, and then it made a move towards the upside. I need to learn to sell in 2 pieces, and I think I did that very nicely later on in the week. But this was the first trade, and it seems like that's why I didn't rank my trading that high, but that was the case there, and I should have had a bit more shares, maybe 80 shares. Yeah, that would have brought it to a $20 risk level. That was a good attempt for what it was being on Monday, I think, but I need to learn to sell in 2 pieces. It seems like something that can help me be a lot more profitable in trading. As long as I'm not cutting losses, I think I should try selling in 2 pieces at least. Let's look at the next trade, which is MULN. This is a morning high day breakout, so very similar setup to GESI. Let's look at MULN for the 31st. Right here, it's the first green day. Pretty impressive move. And the 31st is way back here. I was in it at 947, 128. Let me zoom in a bit more. 947, I guess I have to zoom in even more. 947 was right here. This candle right here, and I got in at 128. Why did I get in it? It did break out of this range, this 125 range, but it was also breaking past this 128 level, which was the wick right here. and that's why I was in the setup. It was trading in the range at the morning for screen day, gap up, setup, and then when it breaks the day high and it does this move, I mean, it got as high as the 140s, which is pretty nice. Although I did get out the next minute, 9:48 at 129. So right here. And I just didn't have enough of time to really watch this thing while it was still developing. I saw it a bit late when it was just about to do it, and I got in it. And I had this thing on a leash, and when I saw that it wasn't working exactly the way I wanted it to, as you can see, it kind of held itself together here. It didn't really uptrend. I sold. But actually, as you can see, the next minute, it continued the uptrend, and I should have probably have done the thing where I could have sold in two pieces. I gave myself some slack with this one right here, and I did trade a small amount of shares because it's a listed stock, so I trade a $5 risk level. But let's just see what a sell would have been like. The high is the 144, so let's see what a sell at 133 would have been. Yeah, that would have been nicer in terms of percentage gain. I wouldn't have made that much, and that is because it's a $5 risk level with listed stocks. But I might consider moving this to a $10 risk level if I can see more consistency trading listed stocks. I did trade a few listed stocks this week, and they were all pretty good in terms of the way that I traded, but I don't make very much because there's a $5 risk level, and I think I might increase that to 10. Let's look at the next setup, which is multi-day resistance breakout. The setup, AWH. Let's look at AWH for the 31st. Again, another listed stock right here, and this is the 31st. Why was I in it? It was like a resistance level, this 60 level. You can see this is the level it broke when it made this really big downtrend. You can see how it tried to get above it once here, then it came back, and then it was a ceiling these next few days. It sold off of it, and then it started the uptrend, and then on this day it actually broke past it. So that's why I was in the setup for that reason. Let's highlight the 31st, which is right here. I was in it at 1054, 5997. So let's just say 60, right at 1054. So I was in it right here at 60. I tried to get in at 59 and it just started to go without me. So I had to place an order at 60 right here. But this is essentially why I got in, because it was breaking past this resistance level right here. And again, I was in it right here at 60. I did sell in two pieces. I don't know if I can remember when I sold both, but I did get out ultimately at 1140 and my average was 61. Let me make sure. Yeah, 1140. So I held this one for a while. I got out right here ultimately, and my average was 61. So I pretty much sold right here. I sold my last piece here, and I think I sold one piece when it was at 62 way back here. And I like this one because I got in the setup. I held on to it after I sold half of my position while it was at 62. And the other half I sold it when it finally looked like it was going to break a trend line, which I had according to this price action, I believe right here. It's kind of hard for me to remember now, but it was something like this. And I did get out of it around this level when it broke past this uptrending trend line. And it did get a little higher into the 63s, but if you look here, it did ultimately fail. It didn't get much higher, but I think that was a good attempt for what that was. We remove this and go back to the way it was right here. This was a pretty good setup, and I like how I held it for a long time, because that really is something I'm trying to do, is hold on to some setups that take longer to develop. Let's look at the next trade, which is MULN. On the 31st, again, intraday high a day breakout number 2. So another similar high a day breakout, but this is now the second time, the second breakout, not the first one. Let's look at MULN for the 31st, which was, I believe, that first, yeah, that first green day. Right about here. So my first setup again was right here at this 128 level that I sold really prematurely, but it did work out at least. And I believe the second high day breakout setup must have been around here. Let's see. I was in at 101, 142. So right here 101 at 142. So I guess I was playing it off of this level, and I got in it for that reason right here. As you can see, it did get to the 150s, which isn't bad in terms of percentage. Again, I was in it right here at 142, 101 p.m. Right there was my entry. I got out 114 at 144. So right here, I got out at 144. Yeah, again, I was in there right here. I probably didn't like the price action, and then it just uptrended here, and I sold here. It ended up doing this thing where it kind of broke the day high, had a small uptrend, and then it kind of came back and it held the level, and then it made a move towards the upside. Maybe I should have been more patient with a setup like this, and I could have maybe perhaps cut it if it were to have broken my original level. But that was actually a setup where I could have been really profitable if I held this one longer. I sold half of my position before it was breaking out. It seems like when it didn't seem like it was going to do it, and then I sold the other half based off of the trend line. But again, it broke maybe a trend line that I had previously, but it did get higher. Let's just see what a sell at 150 would have been, out of curiosity, because that would have been kind of realistic. It would have been a nice percent gain, not very much money made because it's a $5 risk level, but that's still pretty good. Again, if I can see more consistency trading listed stocks, I will consider trading a $10 risk level, so I'll double my size. Let's look at SYXX for the first day of June, and this is a gap down morning panic bounce play. So the first day of June was right here. Yeah, you can see how I had a gap. It opened much lower than this day right here. You can see the sell-off from that previous day. I was in it at 934.519, so let me zoom in a bit more. And let's get rid of some pre-market price action. 934, I was in it right here at 519. I got in it probably because it just looked like it was going to do it. It had a gap down. It was down on the day. It got as low as this 46 level, started to trade back and forth, and then I guess from the price action, it just seems like it was going to uptrend and break this 52 level and make a move towards the upside. But as you can see, it had one more downtrend, and I did get out of this one quickly. I wasn't in it for very long. I got out at 936 at 51. 936, I got out at 51 right here. So I was in it right here, 519, and I got out at 51 when it looked like it was going to break 51, which was like a mini support level, as you can see right here, and it was resistance back there a little. I got out. It did get as low as 48, so I'm glad I stuck to my plan, and I think I traded it after that one more time. Yeah, gap down, morning panic, bounce like VWAP hold. So essentially, I got in right here, cut it. It didn't look like it was going to work out, but as you can see, the first part of the day, it had this downtrend as low as 46, came back above VWAP, came back under VWAP, but higher than this level, came back above VWAP, and then when it had a drop and it held VWAP, so you can see like there's a change in momentum, or at least that it's making higher lows, and maybe it can uptrend over a longer period of time. That's why I got in it one more time, again going for that breakout above this 52 level. I got in at 948, 51. This was a good entry. I got in right here at 51, 948 when I probably noticed the price action and what it was doing. And yeah, it was nice because it did get to the 57s. Again, I was in it right here at 51. And I did get out at 951 at 525. So right here, 951, I was out at 525. I got out right here. What I could have done maybe is that I could have sold half of my position here and then let it downtrend, and then, you know, if it doesn't break the previous low, it can be a higher low, and then it moves even higher, which was the case here. And then I could have sold on the other half at 56 or something very high, and you know, just try to be more disciplined and better, more profitable. And I didn't trade the appropriate amount of shares. I should have traded, it seems like 7,000 shares, which was a little bit hard to catch because in the previous trade, I traded 3,500 shares and that was according to a $20 risk level. But I guess because I had a tighter stop and risk level and everything like that, in terms of where I was going to cut the trade if it doesn't work out, which in this case would have been VWAP breaking, I believe, or just getting below the line again. I was going to cut the trade, but I should have had twice the amount of shares and I would have had a much more profitable trade right here, but that's fine, I guess, for what that was. And yeah, let's look at the very last trade, which is WSFT. This is a morning panic bounce play on a stock that is only up one day. Let's look at WSFT for the third. And the third is right here. Kind of sketchy because they had a run up before for just 2 days and it sold off. But this was massive. This thing went from like this 8 penny level and it got as high as 38. And then it did have a brief morning spike, but then it sold off. And I actually did trade it because even though it was only up one day, it was up massively that one day. So I thought if it could downtrend, it might try to do like a bounce setup, and I was kind of iffy with it. I did try it. I didn't have to try it and it didn't work out, but I did the best. I got in at 959 at 34.24. 959 was right here. I got in at 34.24, so I got in right here. It looks like it had to sell off, right? The 43s, it got as low as the 31s. And then it looked like it was going to hold, you know, in theory, maybe max volume and everything like that. It did get a little higher. It got to the 36 level briefly, but as you can see, it never got to VWAP or anything cool like that. It got even lower, although it did eventually get back to VWAP here, but that would have been something I wouldn't have really have traded, especially because it was just up one day in a row. I got out the next minute at 35. So at 10 o'clock, I was out of it right here at 35. I actually recorded this one live accidentally, and you can watch the video I placed on Friday, and I just didn't like the price action overall. I didn't like how it started to trade with a spread, and when a stock that is trying to uptrend starts to trade with a spread, it just shows that the thing is very desperate, and they're trying really desperately to make an uptrend. Ideally, when a stock is uptrending and going up, the ask is lifting up, it's moving higher, but the bid is also catching up and it's moving higher. And what happened was is that the ask moved higher, but the bid stayed the same. So it just seems like there wasn't as much momentum. Again, it did get to 36 briefly, but it essentially didn't work out and it got much lower. And I'm glad I cut it right then and there when it just seems like the price action wasn't working that nice. I could have even have tried to sell half of my position at 35 and then the other half when it looks like it's going to break. I guess in theory this 32 level, but it's just hard when you're trading a dip like this because something like this means that everybody's going to be cutting the trade if it gets to 32, and as you can see, it would have been hard to cut for losses. So I think I'm happy overall with the way I did it. Not too bad for a week, a lot better than the week before that. I will be trading a $25 risk level. Ideally, I don't have a bunch of full-sized $25 losses, and I can start to nail some setups better, continue trying to sell in two pieces and use trend lines to hold on to setups better. And if I can see more consistency with listed stocks, I will move that up and trade larger, a $10 risk level. That's it. I'm going to keep it short and sweet. That's all I have for this weekly recap.